Scott Redler, Chief Strategic Officer at T3Live.com. You are here at today's recap. It is Thursday. It's been a long week. It's been a choppy week. There's been a lot of counter trade moves all week long. Now, everyone has a different time frame. Everyone acts on different types of tactics and strategies. And when I was back at, just say, Broadway trading way back when in the early 2000s, when you came in with no positions, typically what active traders did was if the market opens up, you get short versus the high and you see if it can come in and go lower. Market opens down, you buy it, it goes up and then goes green and then pushes. You make your tactical cash flow, and that was part of the whole process of technical trading. That was way before, when everyone thought technical analysis was voodoo. And recently, if you bring it back to basics, that's what's transpired in this upper end of this S&P move. If you start off on Tuesday, let me just go to the chart. I'll just show you. You start off. Here we go. This was I think what was that Friday, or maybe Monday. Monday, everything looked good. We reversed off the 8th day. Boom. Tuesday. Okay. On Tuesday, opened up a little bit. Traded below the prior low, which was 1877. So that was a spot for a high-level stop, if that's what you do, okay? And you were trading for momentum. And then we wound up taking out the prior day low, giving you a small outside day. And the good book would say reduce some risk and maybe get short overnight. So the next day, boom, opened up down. So if you did go home short overnight and you made money, came in, what did we hold? We held the prior high, held above the 21-day, closed pretty strong. What the good book would say is an active trader, you know what? Put some risk on. We closed pretty strong. What you probably should do is get a little follow through. So today we came in today and we're like, you know what? All the underneath the surface stuff that we saw has been taken somewhat in stride. Makes a little sense. So then what happened today? Boom. Opened up a little bit, same type of scenario with a bigger range. We then came below the prior high, which was 1869, which was lower than that. So that was one spot to take off some momentum longs. Then we went red. That's probably when I took off the majority of my risk. And then once we took out yesterday's low of 1854, that would probably be another stopping point. And now what do? We close below the 21-day, below the 8-day, below the 21-day, two moving averages that most momentum traders that I know, including myself, use to get out of their portfolio approach. That's when you say, okay, if you were riding this trend all the way from down here after you had your red dog reversal at whatever this was, 1760, and let the moving averages catch up, and you were saying, I'm going to be in multiple positions for this entire time. Here was wake-up call number one. And then if you got back in a little bit here, hopefully you got out here, because you never know what this is going to lead to. But this is pretty, I would say, pretty potent and something to look at, and you could always get back in. I was trying to look back at like this past, these past, trends of when this took place and what wound up, transpiring. But a lot of times here, when it felt as if you were going to get an outside day to the downside, it opened up and nothing really happened, and finally it broke right here. You look further back, here was another king of queens. So you really haven't had that much, I would say, potency to the downside after a drastic day. So I understand if you're not like balls to the wall short. Here you had this choppy action. Remember this head and shoulders pattern? You had a gap down, and then it was a day to the downside below the 21-day, and then it trickled lower before finally. So I would say this doesn't mean it's game over on an active or intermediate level, but it does mean there is some damage. There'll probably be some footsteps, and it made some sense if, especially if you were able to sell some strength. I sold some strength, and then I lost some getting stopped out on my way to, meetings and a little bit of fitness at lunchtime. And now I have no positions left. Not saying if you're a macro investor you need to be out of your positions, because you don't, but as a trader who trades for P&L and cash flow, this was a spot to get out of some risk. So maybe if we do try and retest the low we put in when the Ukrainian crisis hit, or the low around the 50-day, we do, because remember here when we broke below the 21-day, that we broke below the 8 and 21 day, and we wound up hitting the 150 day. You don't know if that's going to happen, but this happened pretty darn quick, and it was better to be out of the way for these 80 handles than sitting through and saying what's going to happen next. So, we'll see what happens next, and I'd rather see what happens next from a bird's eye view versus being caught in there saying I'm going to buy every dip, and if it winds up being more, because 150 days all the way down here at 1765. Last time the 100-day was down here, the low was that was different. It was 1740, so it's not it's not that much different. So anyway, that's the way I would have navigated. And if you didn't, and you just stayed long, your P&L probably hurt. So what you do is you look across the board to see, does this align with other leading stocks in other situations that could give you some clues that the downside continues, or was that the downside? So you go to the Qs, technology. Not much to see differently, except for it did close well below the 21 day. So 8/21 day, if this is your out, that's your out. Here's your 50 day, here's your 150 day. Might as well put the 100 day in to see where that's at, because people do use that. Let's see, let's go 150 day, or 100 days, sorry. 100 days right here. Actually, no, right there, sorry. Last time we closed below the 21 day, we wound up getting another down day, because this one wasn't as drastic as this one. And then with some choppiness, we wound up putting our low in right around here. So if this is going to follow suit, because you never really know what's going to follow, but you don't want to be in that pain, at least I don't. So here, some might say we're going to get like some kind of head and shoulders pattern where now if they want to frustrate some people, it opens up tomorrow and comes back and does this, and then the bears will say we have a, that head and shoulders pattern, but you don't know if that's going to evolve that way. So anyway, day to clean up. We talked about the Russell, I believe, on Monday, showing how it failed to make a new high with the market, and now it just made a lower low and a little bit below a prior peak. It's now comfortably below the 8 and the 21, which for a leadership group, that should give you a little bit of skepticism. Let's see what the Russell did. IWM. Wide range bar. This is, I'll tell you though, this is choppy when you have up, down, up, down. It's like red light, green light, 1, 2, 3. You can get spun around and get nauseous. Usually like a few down days of a trend, but anyway, momentum a little lost. 8/21 day, somewhat gone. We'll see what happens tomorrow. Here is the 50, here's the 100, here's the 150. Last time we broke a trend or fell below the 21 day with authority, which here it didn't. So if we got up tomorrow, I'm sure some bears will be pretty upset. It just happened to flag through, which it kind of broke through but came above. So again, if you're active short-term alpha and you want to be sort of flattish, this gave you every reason to do that, especially when you have like a breakout, somewhat failure. Sometimes risk could happen fast. So let's go to some names. Some names that we spoke about that did not make new highs with the stock market when the S&P did, that gave me a little bit of skepticism. Google, number one. What did that do? Here is, on this day, which was 3.7, or this day before 3.6, I do believe stock market made new highs. Let's just take a quick look. Spiders. Here was your new high in the stock market. That was what? That was, my eyes are getting so damn bad, I'm getting old. 3.7. So on 3.7, stock market made a new high. What did Google do? Did not make a new high on 3.7, and then went to the 21 day. First time held it, second time closed below. Little bit of choppiness, something different. Maybe it hits the 50, maybe it goes lower. What did Netflix do today? It was strong. Netflix also working its way down below the 8 day, held the 21 day first time, by a lick, and then tried to be strong yesterday, and then today closed below. Does that, close below this too? So to me, if you're active, there's no signal to take this home long. If you're in it for multiple months and you have it from below 200, you don't have to be that worried about it unless you're using high-level stops, but something to tell you momentum is leaving just a little bit. What did Amazon do after a huge gap up? Topping tail, right? Amazon went into the gap. We would have loved to have traded it into it. Instead, it opened up into it and then traded below. Distribution, not great. It should have never given back this much, and now that trade. We'll see. Apple, Stock I was all over today. What a friggin', I don't even want to say it, but anyway, here is when it reclaimed the 50-day. Here it tried to push above the prior price point. I was a buyer at 538, and then I got out of some, and then I got stopped out of some, and frustrating. Here, I guess you could draw a line right here. If it were to break below today's low tomorrow, could see lower prices, and ultimately this descending channel here is in full control. This is the last time I got here, topping tail, and then boom. Here's a little bit tighter. The incline wasn't as steep. Wide range bar engulfed 2 days. Pretty ugly. I'm not long Apple overnight. I've been long Apple overnight the past few days, and today, if we were healthy, we would have broke above 539 and would have been somewhere around here today. Instead, we went above it, and then we went back below it. That's your red dog reversal. If you're playing for momentum, if you're playing for above 537 or 538, once we went above it, if you didn't take any profits, once we went back below it, you had to take off your momentum shares, and then really once we took out or closed back below the 50-day, that was your intermediate stop. If you're in a long term, or from here, from this red dog reversal or whatever, then you have to figure it out. There's a little void right here, and I'd rather figure it out from the outside than from the inside. That's Apple. What did Tesla do today? Came in long, talked about selling some pre-market. Well, it was up $3, and then I got stopped out of the other piece, and this actually held up a little bit better. Didn't make a new low, but still, you have your downtrend. It's a little choppy in here. 21 days right there. Let's see how it acts there the next time. The banks were, probably a little bit weaker than some would have liked. I did get stopped out of Bank of America. I put a stop in when I went to the gym, and it still acted okay, but here's the XLF. Another huge outside day, still above the 21-day. Last time it came down, it held the 21 days, so maybe it sees a little bit more downside, and we'll have to judge it somewhere around here. Bank of America, though, still, in my opinion, best in breed. If you have a macro position in Bank of America, don't try and be too cute. I can be cute. If you're not trading every day, you might not be able to be. This still held the 8-day, while the index is at the 21-day, and I would just give it a little bit more time. Even if it does come in, I think that you'll wind up being okay. There was a nice cash flow move here. Now we'll see what happens next. Fasten a book. What's that, German for Facebook? Getting a little wishy-washy up here. Remember, this small outside day led to a Bible down open. This opened up, led to a move below. Now we're at the 21-day. Has not been below the 21-day this entire time. So if it breaks below, maybe some momentum is leaving. So take a little care. Here's your next point of reference. First is this, which is today's low. Twitter, I'm kind of sick of donating money to this trading-wise. I have none overnight. Not much I could say here except for I've been using an opinion, thinking that I think at some point, whether it's 3 months, 6 months, 9 months, 12 months, 15 months, 25 months, this high will be taken out, but I've seen no confirmation that as an active technical trade, it was worthy of being in there with anything more than a feeler. And today it closed on the lows right at this area, and the bears could make a case that it's going to come back and test here. We'll see. Or it just goes sideways and continues this monotonous mess, and hopefully I don't get caught in it the way I've been caught in it the past few days, and I'm sorry if you've been with me there. Gold. Let's go. Oh, you want to see me? Hey, there I am. I shaved a little bit. Had to change it up a little bit. I have a dog at home, haven't been sleeping much, things have been busy, and I had a little bit of a goatee, actually beard, and you saw the gray coming in here. I guess that's what comes with 41 years old. That's how old I am. So always want to change it up. So anyway, it's Thursday. Let's go back to the chart. Go to the metals, GLD. Trending very well this year. This has been trending different than 2013. Here is your double bottom. Here is pretty much the only trade I did in the metals this year. Right around here, I bought some calls. Right around there, I sold the other end of it for a call spread. Made a nice move there, and then I haven't really visited since. And if you're in there, great. On CNBC, I talked about 1440. It's now at 1300 and change. I still think there's some move, some room there. It's a little overbought, a little extended from the 821, so be a bit careful. TBTs. Sometimes things in your drawer could smell a little bit. I've talked about keeping the TBTs in the drawer because they don't trade well. If you're trading, on an active basis, I'm like, this was your out. If you are right here, and as a trade, no real trade here. as a concept, keep it in the drawer at some point, whenever it is. I would think rates would be higher, even if, you know, the economy gets worse and things come to a grinding halt. But technically, if I were to look at this and this wasn't TBT and it was a chart, I would say this looks pretty darn bearish. You know, below every moving average here, 200-day controlled it, pwned down move, big time support. See how it handles that. So taking the TBT name out of it, technically, looks very weak. Same way, you know, I don't remember, what was it, JJC? You know, when me and Darcy were in here talking about copper, it's pretty crazy how beat up copper's been. And, you know, copper is supposed to be a barometer of global growth, and you go to the monthly chart, which he showed me, and it's interesting to see what would have happened if we didn't have QE to, you know, prop up the markets a little bit. I'm not against QE, I'm not for QE, I'll do whatever the market does, you know, but, you know, with copper, on a monthly basis at lows back to below where we were in 2009, it's pretty much shown you that the world economy is not a heck of a lot better than we were near the lows of the stock market, but the stock market might have had a little bit of help. Copper hasn't. So with that said, on the lows here, who knows where it goes next? A little food for thought. And that's why some people think that the market's inflated. What we do is we trade trends on an active, intermediate, macro. Right now, the active trend is a little broken. The intermediate trend, I'm not sure. So that's why you see me go from a portfolio approach, which is what I've tried to be in, back to out of most of my positions, and I'm actually short overnight. You know, I don't think it's a great trade, but, you know, the bounce in the spiders, let's just go back before we end. You know, you go to your daily chart, this bounce in the spiders, let's go to the 5-minute chart, from, where are you? From 184.60, I wasn't short, came back up to about 185 something or other, 185.30, so I shorted a little bit because I figured the good book would say you should get a little bit more downside. And if we open up, people are going to try and short it. We open down, people might try and buy it. So I went out a little bit short the spiders, but I got stopped out of most of my other positions. And, you know, you look at this trend, 8-day, 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 broke below it. Here is your spot to go from portfolio to tactical. Try and start day trading, try and start fading moves. You could have shorted this, bought that, shorted this, then maybe we'll be able to buy that. Hopefully that's the case. We'll see. Tomorrow I'm trading out of Short Hills. Darcy will be doing the morning call express. It's the relaxed morning call on a Friday. I will be on the radio. You will be getting a morning note. I wish you guys the best of luck. Hopefully you got out of today safe and sound. You sold some strength. You used some stops. You stuck to your guns, and it wasn't an easy day. So anyone who wants to tell you that they were giving money away, I don't know. It might be paper trading, but it is what it is. With that being said, Scott Redler, T3 Live, the recap. I will see you on the radio, in the Twitter sphere, in the private Twitter sphere, and I just wish you the best. Have a good one.